Processor and Underwriter Training. Today we'll be discussing the Step Up program, the First Step program, the down payment assistance available, and the reservation process. Step Up program requirements. The Step Up program has no sales price limits and no first-time homebuyer requirements. There is down payment assistance available. Funding for this program is always available. There are no additional inspections required, no acreage restrictions. Pools, barns, and non-income producing outbuildings are allowed. The Step Up program has a market rate 30-year first mortgage. The minimum credit score is 640. AUS findings are required. DU and LPA are acceptable for FHA and VA loans. LPA must be used for the Freddie Mac HFA Advantage program, and GUS must be used for USDA. The maximum DTI is 45%. The different loan types available are FHA, VA, USDA, and Freddie Mac's HFA Advantage mortgage. With the conventional Freddie Mac product, borrowers may qualify for an affordable income subsidy grant and reduced MI coverage. The income limit is based on the underwriter's qualifying income for the FHA, VA, and USDA programs. For current limits, please check our website. The property types that are allowed are attached, one-unit, single-family homes, townhouses, or Freddie Mac FHA-approved condominiums. Manufactured homes that are classified as real property are allowed for FHA, VA, and USDA loans only. No manufactured homes are allowed in combination with our conventional product. Interest rates are set by AHFA, and both the first and second mortgages are the same interest rate. Now let's cover the First Step program requirements. The First Step program offers below-market 30-year fixed mortgage interest rates to first-time or repeat homebuyers based on where the property is located. Just like with our Step Up program, you can use either an FHA, VA, USDA, or Freddie Mac HFA product. Down payment assistance is also available. The income limit is based on the borrower's income. Sales price limits are based on the location of the property and family size. The minimum credit score is 640 and the DTI maximum is 45%. First Step program requirements. Borrowers are required to be first-time home buyers when buying in a non-targeted area. There is no first-time home buyer requirement when the property is located in a targeted area. Income limits are based on the location of the property and family size. Please check our website for current income and sales price limits. First Step loans are potentially subject to recapture tax. First-time home buyers. The borrower is required to be a first-time home buyer if the property is in a non-targeted area. That means that they have had no home ownership interest in a principal residence in the 3 years prior to the execution of the initial loan application. There is an exemption for veterans and their spouses as long as the veteran has not financed a home using an MRB loan or has not been dishonorably discharged. Ownership interest includes fee simple, joint tenancy, interest of a tenant shareholder in a cooperative, life estate, or ownership of a manufactured home on owned land or leased land for 3+ years. What are targeted areas? A targeted area is a qualified census tract or an area identified previously as economically distressed. A targeted area may be an entire county or may be a particular census tract or other designated specific area within that county. Other counties may be all non-targeted. Please see Here's a map where you can see the targeted areas in blue and the non-targeted areas in gray. The targeted areas are going to have higher income and sales price limits. Again, there is no first-time homebuyer restriction for targeted areas. In non-targeted areas, the borrower must be a first-time homebuyer and they are going to be subject to lower income and sales price limits. If the subject property is not identified on the map on our website, please submit this form to compliance@ahfa.com. We will research the property location and make a determination. You can submit this form prior to reserving the loan with AHFA. Household size. Income and sales price limits are based on household size. Any changes to the total household could affect the borrower's eligibility and may require additional documentation. Non-occupant co-borrowers or co-signers are not allowed under the First Step program. Unborn children are excluded from household size totals. Here is a chart of the First Step income limits. Please check our website for current limits. First Step program income eligibility versus qualifying income. The lender will complete the initial First Step income eligibility and credit qualifying income calculations. Prior to closing, AHFA will review and approve the borrower's First Step income eligibility and issue the conditional commitment. The First Step income eligibility calculation will use all sources of income for the borrowers. If a borrower is not working and does not plan to seek employment within the next 12 months, an employment statement is required. Income of household members not on the loan is not included in the First Step program income eligibility calculation. Again, our income eligibility calculation is for all sources of income for only those that are on the loan. First Step income eligibility calculation. Gross income is calculated by projecting gross income forward for the 12-month period beginning on the date of the loan application. Year-to-date earnings reported on the pay stub should be reviewed by the lender to determine if more income has been earned than base earnings. Any non-reoccurring income, such as relocation assistance, should be verified with the employer before deducting from eligibility income. Typically, income from overtime, bonuses, and commissions will be averaged for prior year and year to date. If it is newly received, we will use current year only. Any income that is used for credit qualification will be included in eligibility income calculations. Here is an example of our First Step income eligibility worksheet. This worksheet is required to be completed and submitted by the lender. Income documentation requirements. Lenders must submit the most recent 30-day consecutive pay stubs from the date of the initial application. The pay stubs must include the year-to-date earnings. Along with pay stubs, W-2s or 1099s for the most recent year and the most recent year's tax transcripts must be submitted. We require current awards letters for applicable other income sources. We will also need divorce decrees, separation agreements, or other verifications of child support or alimony payments received. For self-employed borrowers, we will need the most recent year's federal tax transcript along with a signed and dated year-to-date P&L. Rental income, if applicable, must be documented with a lease agreement or third-party verification of market rent. 75% of the market rent will be added to annual income. For any retained properties, rental income will be estimated unless the borrower provides us a written statement that they have no intention to rent the property for the next 12 months. Here are the First Step sales price limits. Please check our website for current limits. To calculate acquisition costs, please include the following: The price indicated in the executed purchase contract for a proposed new or existing house and lot or land that will be conveyed to the borrower when the loan is closed. The price or total cost to construct a home on land owned by the borrower. The amount paid by the borrower for the unimproved lot or land if owned less than 2 years before the date of the initial loan application. The borrower paid cost of necessary repairs to the residence that are not included in the purchase contract. Amount paid in cash or in kind by any other person to or for the benefit of the seller or related party on behalf of the borrower in connection with the property. The cost for fixtures that are not included in the sales contract. Please exclude the following when calculating acquisition cost: the amount paid by the borrower for an unimproved lot more than 2 years before the date of the application on which the subject residence will be or has recently been built. The cost for personal property that is not included in the contract for sale. The sweat equity of borrower or borrower's immediate family's labor. Loan points paid by the seller. Usual and reasonable settlement and financing cost. Eligible properties include a 1-unit single-family detached home, a 1-unit row house, townhouse, or condominium project unit with FHA, VA, or Freddie project approval, a manufactured home built on a HUD-approved permanent foundation and classified as real property. Manufactured housing loans are only permitted with FHA, VA, and USDA financing. Manufactured homes are not allowed with our conventional Freddie product. Property ownership must be fee simple. Leasehold properties are ineligible. Prohibited property uses. The property cannot be rented, leased, quitclaimed, assigned, or interest transferred. The property cannot be used as a place of business or trade. The mortgagor cannot deduct any portion of the residence as a home business. The property cannot be used as an investment property. It can also not be used as recreational, seasonal, vacation, or as a second home. Title restrictions. Title may be held in only the names of those persons who sign both the mortgage note and the security instrument. The warranty deed must be prepared correctly to ensure it adheres to these program requirements. Properties still within a remaining redemption period from foreclosure may not have a title exception for the redemption period. Please see the loan delivery guide for more information and details as to title restrictions. Down payment assistance. Second mortgage details. The second mortgage program can be combined with any of AHFA's loan programs. It must be combined with our first mortgage and is not a standalone program. You also are not required to use the down payment assistance with our first mortgage. The interest rate is the same as the first, but is on a 10-year term with a monthly payment. The maximum down payment assistance is the lesser of 4% of the sales price or $10,000. There is no prepayment penalty. Please run AUS with subordinate financing included in the monthly payment. This is a loan, so you must provide an LE and CD. Our homebuyer assistance second can be used for down payment, closing cost, and realtor commission if applicable. The homebuyer can get back funds POC back at closing, including earnest money. An affordable income subsidy grant is available only for borrowers seeking conventional financing. Funds must be used in the transaction, so the borrower cannot receive any cash back. The LPA key number should be the same across all submissions. Below is the maximum assistance available based on the area median income. When running LPA, be sure to use the code HFA or 251 and reflect the amount of the grant in the Assets section. Your findings will indicate whether the borrower qualifies for reduced mortgage insurance. Also, make sure the grant is in Section L of your pre-closing CD. First step, specific documents. On the left are the documents that need to be included with your submission for the conditional commitment. These documents do not require notarization and are eligible for e-signature as described in the loan delivery guide. On the right are the closing documents for the first step loan. These riders are attachments to the mortgage and they must be notarized, wet signed, and recorded with the mortgage. All first step specific documents will be provided to your corporate office for inclusion in your documentation packages. Additionally, they are available on our All Regs lender library as well as Lender Online. How the process works. Number 1, the borrower applies for a mortgage loan through an AHFA participating lender. Number 2, the lender reviews the application for credit qualifying and AHFA program eligibility. The lender will then reserve the application via AHFA's reservation system and remit the commitment fee and the Step 1 package within 72 hours of the reservation. Number 3, the lender submits the Step 2 request for the conditional commitment to AHFA. Submission must occur prior to closing and reservation expiration date. Number 4, AHFA must review the package for compliance with program guidelines and issue a conditional commitment prior to loan closing. The originating lender is responsible for credit and collateral review and approval. Number 5, the loan closes in the lender's name and they table fund both the first and second mortgages. Loans must close by the reservation expiration date. Number 6, within 10 calendar days of loan closing, the lender submits the closed loan package to AHFA. After the loan is purchased from the lender, AHFA will become the master servicer, doing business as Service Solutions. First step and step up program reservation periods. Loans can be reserved for 30 or 45 days. For a 30-day reservation, the commitment fee is 0.5% of the total loan amount. For a 45-day reservation, the commitment fee is 0.75% of the total loan amount. The funds must be wired within 72 hours of making the loan reservation. Extensions are available, but the lender must request an extension prior to the expiration of the original reservation. Commitment fees are not collected on the down payment assistance reservations. Commitment fees are refundable. Reservations are made through our website called Lender Online. Please refer to the main AHFA website for training resources and to view our Lender Online reservation portal and file submission video. All program checklists are located on Lender Online. These checklists must be used during the submission process. Remember to use the correct checklist associated with the program reserved. Also remember to follow the stacking order and only submit those documents listed. If additional information is required, the compliance examiner will advise you. AHFA must issue the conditional commitment before the loan closes. The next 2 slides are examples of the Step Up and First Step program checklist. Program fees. Lender fees are capped at $1,300 for the First Step program. The Step Up program does not have a cap on lender fees. The maximum origination fee charged by the lender may not exceed 0.5% for the First Step program and 1% for the Step Up program. There is a tax service fee of $85 and a funding fee of
$246.
These are paid at the time of loan purchase and deducted from the loan funding. Remember that the second mortgage requires a separate CD and the only fees allowed are recording fees, per diem interest, and MERS registration fee. Homebuyer education requirements. At least one borrower must complete a homebuyer education course prior to loan closing. Acceptable curriculums include all HUD-approved curriculums, Freddie Mac's Homebuyer U, NeighborWorks, and the approved PMI company's curriculums. Evidence of course curriculum completion certificate must be included in the closed loan package. Here is some helpful information. Please visit our website for training resources and access to AHFA's All Regs site, which includes program information and loan delivery instructions.